We often hear that the rich get richer, but what separates their financial behavior from that of the middle class? It's not just about having more money, it's about using money differently. While the middle class often focuses on stability, security, and consumption, the wealthy treat money as a tool for freedom, control, and opportunity. They follow specific patterns that build wealth over time, many of which are available to anyone with the right mindset and habits. In this video, we'll explore 10 powerful ways the rich use money that most of the middle class doesn't, and how these behaviors contribute to long-term financial success. 1. The rich buy assets first, the middle class buys liabilities. The wealthy prioritize purchasing income-producing assets, real estate, stocks, businesses, before indulging in luxuries. In contrast, the middle class often buys liabilities that look like assets, such as expensive homes, cars, or gadgets that drain money over time. According to Robert Kiyosaki, author of Rich Dad Poor Dad, the difference lies in cash flow. Rich people buy things that make them money. The middle class buys things that cost them money. 2. The rich focus on equity, not just income. While the middle class usually measures financial health by income, salary, the wealthy look at equity, what they own minus what they owe. Rich people build net worth through appreciating assets, business ownership, and stock portfolios. They understand that owning equity, such as shares in a growing company or property in an appreciating neighborhood, leads to long-term wealth. Meanwhile, many in the middle class rely solely on earned income, which is taxed the highest and limited by time. 3. The rich use leverage wisely. Wealthy individuals often use other people's money, OPM, through mortgages, business loans, or investor capital, to build more wealth. When done responsibly, leverage accelerates growth. For example, real estate investors may use borrowed funds to acquire income-producing properties. The middle class, by contrast, typically fears debt and uses it mainly for consumption, cars, credit cards, which doesn't generate returns. 4. The rich invest heavily in financial education. Rich people spend time and money learning how money works. They read financial books, follow market trends, attend seminars, and work with advisors. This ongoing education helps them make better investment decisions and avoid financial traps. The middle class often relies on conventional wisdom or advice from people who aren't financially savvy, missing out on the nuanced understanding needed to grow wealth. 5. The rich prioritize tax strategy. One of the least discussed, but most powerful differences is how the wealthy use legal tax strategies. They structure income through investments, businesses, and trusts to reduce tax liability. Many use capital gains rates, tax-deferred accounts, or charitable contributions strategically. In contrast, the middle class typically earns the bulk of income through wages, taxed at the highest rates, and rarely plans proactively to reduce taxes. 6. The rich own businesses, the middle class works for them. Wealthy individuals often generate income through business ownership. Whether it's a tech startup, franchise, or real estate business, this provides multiple income streams, tax benefits, and control over time. The middle class largely trades time for money, depending on job security and employer decisions. Business ownership not only creates cash flow, but also builds long-term value that can be sold or passed down. 7. The rich hire experts instead of doing it all themselves. Rich people understand the value of time and expertise. They outsource to financial advisors, accountants, lawyers, and consultants to protect and grow their money. These professionals help avoid costly mistakes and optimize financial strategies. Meanwhile, the middle class often takes a DIY approach to taxes, investing, and budgeting, sometimes saving money up front but losing much more long-term through inefficiencies or errors. 8. The rich delay gratification. The middle class often spends first. The wealthy are known for long-term thinking. They're willing to live below their means, reinvest profits, and wait for compound growth. Jeff Bezos famously reinvested Amazon's profits for years before turning massive profits. In contrast, the middle class is more likely to spend increases in income quickly, upgrading homes, cars, or vacations, rather than building investment capital. 9. The rich create multiple streams of income. Most wealthy individuals don't rely on one paycheck. They diversify income through rental properties, dividends, side businesses, royalties, and more. This financial resilience provides security and accelerates wealth building. The middle class, however, often has just one income source, their job, making them vulnerable to layoffs or economic downturns. 10. The rich think in terms of generational wealth. The rich plan beyond their own lifetimes. They create trusts, estate plans, and succession strategies to ensure their wealth benefits future generations. They teach their children about money and establish family values around stewardship. The middle class tends to think in shorter time frames, like paying bills, saving for retirement, or funding college, but rarely plans for legacy wealth. Wealth is not simply a result of earning more, it's a consequence of thinking differently about money. Rich people use money as a tool to generate freedom, create value, and build legacies. They prioritize assets over consumption, invest in financial literacy, and think strategically about risk, taxes, and time. The good news? Many of these habits are not exclusive to the rich. Anyone can begin applying these principles, starting small, thinking long-term, and making intentional financial choices. Shifting your mindset from consumer to investor, from earner to owner, is the first step to transforming your financial life.